Nvidia's data center revenue might double over the next year. But not just that. I'm not worried about the next year. I'm worried about the years after that. What's going to happen in 2024 and 5 and 6? And who is actually the competition for Nvidia? Because I hate to say it, but Nvidia's revenue last year ending in January was $15 billion specifically for the server segment. The server segment alone, data center, there it is, data center revenue, $15 billion. That represents, out of their $27 billion approximately of total revenue, 55% of all their money over the last year already came from data centers. Well, next quarter, in quarter two of the year, we're expecting, their quarter two, we're expecting data center revenue potentially to come in at $7 billion for the quarter. That would be an increase from about the 4.3 they did in this quarter. Well, $7 billion in a quarter. If we just stay at that rate, we're looking at a $28 billion source of revenue just from data centers alone if you annualize out the next quarter. Forget gaming for a moment, forget professional visualization, forget automotive, which is growing already at a rate that's doubling. This is their Orion platform. This is their Omniverse platform, which is like the realistic version of the metaverse that actually makes money. And gaming obviously makes a lot of money. They're still going to compete in gaming. In fact, gaming has finally bottomed and we're seeing growth in gaming. But the numbers that we got today from NVIDIA told us that they're expecting data center revenues to be at around $28 billion annualized for the year. That's more than they made all of 2023, 2022, ever. So just data centers alone could see a doubling, almost a doubling of revenue just this year. And if we get another, say 50% growth next year, not even a doubling of revenue. You ready for this? Not even a doubling of data center revenue anymore. Forget all of the other data. Let's just make this so simple. $28 billion of data center revenue in 2023. Now we're going to add 50%. That's going to put us at $42 billion in 24. Let's add 50% growth again. That's going to put us at 63 billies. Add 50% again, that'll put us at 90 plus 1.5, that'd be 94.5 billies, right? So by 2026, so in other words, in 3 calendar years, so call it 3.5 years or so, we could be close to 100 billies of data center revenue. 100 billions of data center revenue. Just roll with me for a moment so you could see the ridiculousness of what could potentially happen. And I don't think anybody saw this coming. And I want to be clear about that. The stock market, Wall Street was expecting this stock to move 4% in after hours. It moved over 20% because nobody expected their forecast of $7 billion of revenue to be a joke, and instead their actual forecast to be $11 billion of revenue. That is a massive increase. To say we're going to have $7 billion of revenue and then to beat that by 57% is absolutely insane. On top of the fact that you're selling these chips at nearly a 70% gross margin, probably around a 50% net margin. So let's call it 100 billies by 2026. 100 bill by 2026, and then we'll talk risk factors, right? That's going to bring you 50 billies to the bottom line. There are 2.5 billion shares outstanding. 50 divided by 2.5 means you're looking at $20 of EPS by 2026 per share from data centers alone, okay? Go ahead and add, I don't know, 20 billies or whatever for all the other stuff, the gaming, the automotives, whatever. So 70 divided by 2.5, that's gonna put you at $28 of earnings per share. So if we now multiply that by, let's say, because we're growing like crazy, let's just take a 30 PE ratio. That's what Apple's trading for now. This makes this a $600 stock by 2026 with this sort of growth rate. And if we include the other aspects of the business, you're actually at close to an $840 stock. You're looking at potentially an 80% return over the next 3 years to potentially a double, even at today's levels at $375. How crazy is that? Just from going from a double of data center revenue, that would be 100% to get here, and then 50%, 50%, 50%. That's assuming NVIDIA only grows at these levels. Now, what we heard in the earnings call was actually remarkable, that the data center revenue or data center sort of total data center market cap is about $1 billion. Now, I did a little bit more research after this. It's somewhere between $1 billion to $1.5 billion, and about 50% of that is for CPUs and GPUs. But going forward, and this is the big thing, so let's go ahead and say it's, we'll take the midpoint number here, $1.25 billion. Let's call that the data center revenue today. 50% of that is the chip segment. So if 50% of that is the chip segment, that puts about $625 million available for chips. Well, most servers are still the old school setups. They're just CPUs. That's because they're data center storage servers, where you're storing static images, pictures, video, text files, PDFs, whatever, generic crap, Google Drive, iCloud kind of stuff, text messages, right? Well, you now go to generative AI, and let's say you need to rebuild all of these data centers, which are now antiquated, as generative AI data centers because everybody wants to start using AI, assuming AI is not a fad. We'll talk about risk factors in a moment. Well, you need to create billion actually. You need to create $725 billion or you're going to spend You're going to spend $625 billion on chip spend. Remember, we said 50% would be just the chips part. The other 50% would be like your fire suppression, server racks, whatever, install services, maintenance services, whatever. The building, the land. So 625 goes into chips. Well, how much of that 625 is going to be GPU versus CPU? Well, new server systems, you would spend about $1 to $2 for every about $20 that you spend on a GPU. So in other words, you're spending about 5 to 10% on the CPU, which could be like an AMD processor, compared to the amount of money you're spending on the GPUs. Okay, so let's say the GPUs get 90% of that 625 market share. We're not even gonna grow the servers. We're not even assuming servers are going to grow, because the reality is this $1 to $1.5 trillion server space could become a $3, $4, $5, $10 trillion server space, right? The TAM could grow. But forget about assuming the TAM is going to grow. Let's just say we're gonna take all the old crap and turn it into GPUs going forward, and not assuming any growth. So if we wanted to assume growth, maybe we assume these servers stay, but we create a new 625. It's not an unrealistic expectation that this would happen within the next 3 years, especially when you consider companies like Google have about 70% of their revenue at risk because of AI. That's somewhere around $50 billion, $48 billion that's at risk per quarter. Per year, Google has about $200 billion at risk due to Google search advertisements and placement advertisements on websites. They've got $200 billion of revenue at risk if they don't figure AI out ASAP. So Google's got a big incentive, and that's just Google. It's not Microsoft, Amazon, Oracle, Apple, whatever. Apple doesn't even do their own servers. You think Apple's got chips? They use Google servers and some AWS for iCloud. Crazy, right? So anyway, if you say 90% is going to go to GPUs, well, so 90% goes to GPUs. That's actually a $562 billion spend on GPUs. Well, what did we just assume by 2026? We assumed just 100 billies of that would be NVIDIA. Well, right now, you know how much market share NVIDIA has of the dedicated graphic chip market? 88%, bros. 88% of 562.5 is about $500 billion, which is actually 5x this number. So now all of a sudden, 5x these numbers. Holy crap, 600 times 5x, not even considering the other parts of the business, this is potentially a $3,000 stock. Now you might think to yourself, Kevin, this is bubbly, this is insane. That's true. And there's going to be competition. And I'm not suggesting this right now is definitely, oh yeah, that's my price target. I'm just thinking out loud. I'm like, oh my God, this is a transformative moment. And I want to just speak logically here. We don't want to make rash decisions, but everybody got caught off guard on this. I got caught off guard on this. Even though I've been for 6 to 8 months talking about don't invest in software, invest in the freaking chips. Even though I got that right, I did not think it would be to this level. I thought this was just gonna end up having some growth and then a lot of hype. So for me, if I drew out sort of my expectation, I thought you probably had, this is the growth part right here, and then this purple part is the recent sort of hype. Oh, the fund manager needs exposure to AI. So that's what you get. But what we really got was this was just a fraction. This was actually the reality is this right here, that whole thing I just drew is like that size. And the reality is all of this is potentially up for grabs in the server space. It's insane. So it's a massive, massive potential market at huge margins. Everybody wants the H100 server sector. And then you look at TSMC and you're like, but Kevin, they have to be able to manufacture all of these chips. Yeah, but what happened during the PC slowdown, folks? TSMC kept installing new equipment and they ran it at 50% occupancy. In other words, they had a very, very crumpled up rubber band. Now, NVIDIA picks up the phone and says, yo, we need to triple our orders of H100s yesterday. And they're like, no problem. We have the machines available. I don't know why they have that accent, but whatever. You turn the machines on, you start printing chips. That's why they think they can supply. But they're getting all these, it's the demand that they're getting that's insane. So now you have to ask yourself, is this just a bubble? Okay, so the questions you have to ask yourself are the following. Number one, is AI a fad? Right? I mean, Kevin's got a course featuring AI now, how to make more money and get SH9T done. We're doing the final release with the final price increase for it on June 1st. So if you get in before that, you lock in the best price. We're gonna teach you how to actually be productive with AI, how to do video AI, how to do image AI, how to do daily productive tasks using artificial intelligence to make you more productive. And you get all of the updates long-term for free. So in other words, if in 2 months there are new ways of doing things better, you get an updated course at no cost to you. It's a pretty good value proposition. I actually think it will be the best AI course that exists for actual productivity, for normal people, entrepreneurs and employees alike. Daily, hardworking Americans. That's what this is for. So, is AI going to be a fad like the metaverse? If you think that, you probably haven't experienced much AI yet, but I'm going to go ahead and conclude that at this point, the answer to that is no. And the reason for that is that AI is everywhere in practical ways, whether it's accounting, legal, fact-checking, proofreading, researching, in healthcare, in cancer research. I don't care what it is, autonomous driving, you name it. AI is there, programming, right? It's in everything. Sales, it doesn't matter. It's everywhere. Unlike the metaverse. The metaverse was a joke. It still is. I mean, maybe we'll have virtual reality at some point. We'll have the Ready Player One world, but that's 10 years out. AI is now. AI could literally cancel the recession. You could see so much spend from businesses that the recession gets canceled. Because businesses do not want to get left behind by AI. So they would actually be more likely to potentially hire or overhire people to make sure that we're not getting left behind in the AI race. And I'm saying AI capable workers, right? You're not gonna hire people who would otherwise get replaced by AI. This is why you have to be comfortable with AI and get used to it and add value to AI and realize where its weaknesses are so you still have value, all of which we'll teach. But if companies are going to adapt to artificial intelligence and everybody's going to get in on artificial intelligence, then companies are going to go through a transition. Eventually, there will probably be more layoffs because artificial intelligence takes your jobs. But is now the time to do that weeding? Probably not. Now is the time to figure out what's your value proposition. How can your company make more revenue? That's the goal right now. Now it's a gold rush, folks. And NVIDIA is selling the pickaxes. That's what this is. NVIDIA is the only one selling the pickaxes. Yes, AMD does CPUs. That'll sit on those server racks. But again, $1, maybe $2 for every 20 you're spending on NVIDIA. It's insane. So TSMC is a winner. Yes, AMD is a winner. Of course, AMD or NVIDIA is a winner. because they're selling the pickaxes of the gold rush. So if you think AI is a fad, you're probably not even watching this video. So let's get past the fact that it's a fad. So what's the next risk to Nvidia? Well, the next risk to Nvidia is competition. Competition is the next risk. Who's your competition? I'll wait. Oh, startups? Okay. Well, good luck starting a server chip manufacturing company and actually getting the bandwidth to get any of your orders fulfilled at TSMC when Nvidia is just going to load all that stuff. Good luck getting into those supply chains. Good luck getting designers to make those server chips. Eventually that'll happen. But companies that are relying on AI, I don't think are going to gamble trying to save a little bit when they need guaranteed uptime for the AI services. Otherwise, their big software businesses fail. I don't want to bet on the software businesses. It's too speculative to bet on the software businesses. I don't know if Snowflake's going to beat out Palantir or Palantir's going to beat out, some other service or some other startup's going to beat both of them. I don't know that. But I do know they're all running NVIDIA. All of them. And I don't think a startup can make a better pickaxe. Can they really make a better pickaxe? That's the question. And I think the answer to that is no. So then you're looking at the cloud providers, basically. The CPI, whatever, the cloud provider services. These are your Oracle, your Microsoft, Amazon, Google, right? Your cloud provider services. Well, Google came up with their TPU, their tensor processing unit, which they started work on in 2017. But guess what they're still doing? They're still buying NVIDIA chips because they're better. The NVIDIA stuff is just better. And then you have to ask yourself, Google spends roughly on just data, like chip stuff. So the way you can figure this out is you look at their whole CapEx. Say their CapEx is $7 billion. You look at their financial statements. You're like, okay, well, of that, maybe only about $2.2 billion is infrastructure for servers. That puts you at about $1 billion for chips, because we know about 50% is the chip cost. The other 50% is the building, the land, and the other stuff. So if they're spending $1 billion a quarter on, let's say, chips from Google, right? What does Google want to do more? Get a little bit, like get those chips for cheaper, basically try to save money on, save on the one bill, or does Google care about, oh wait, the 50 billion per quarter we have at risk because of AI? Well, to some extent you could say both, but if they deprioritize actually making the chip, NVIDIA is just gonna cream them. So why bother? That's the problem. NVIDIA is turning into a monopoly. I hate to say it. It's after today's earnings call, I'm looking for reasons not to think that NVIDIA is a monopoly. They have an AI chip monopoly. This is insane. So I want you to think about some of these tentative things, and I have questions for you. So number one, this could cancel the recession. Number two, NVIDIA has a monopoly, and you might think NVIDIA going up 20% is you missing out, or it's a bubble. What about when it 10 to 20x's? Now people are thinking like, oh, but Kevin, if it's $1 trillion now, could it be $5 trillion? Yeah. Okay, maybe not 10x. Call it 5x. Let's be generous. 5 to 10x. I don't know. So, okay, let's put some of these opinions aside for a moment, because we don't need to do these sort of projections right now. They don't matter as much. What matters is the questions that I have. Okay, here are the real questions. So, what growth is the server market going to see? According to ASML, you're going to see 250 billions of revenue by 2030 per year. That's nominal. However, that was according to a report that ASML put together, guess when? February of 2023. Why is that date important? Because it was before AI. Then you have to ask yourself, what percent of servers today are GPU based? Well, probably very few, because what were GPU based servers good for before? Cloud-based gaming. Who cloud-based games? Not that many people, compared to how many people are going to use AI. So in other words, the odds are your cloud-based server or your GPU-based servers are probably far and few between. This is why on the NVIDIA call, they said most servers are CPU based right now. Huge TAM opportunity. The problem though is anytime you start talking about TAM, you get a little bubbly usually, right? And you kind of lose your foundation and fundamentals. And that's scary. So you have to be careful about this. But then again, the growth rate for these chips at NVIDIA, unless there's a competitor, which where's the competitor, could be phenomenal. Now we also don't know if this is going to be like a one and done, right? What if it's one and done? In other words, what if everyone buys and orders an H100 and then they have them and then they're done? Okay, now we've transitioned, the growth slows down, you had a big AI hype boom, and then it dies. And then it's like, okay, data center revenue's falling again. Maybe, unless of course AI explodes and everybody's like, oh, I thought everybody was using AI. No, actually only 1% of companies were serious about using AI, and now everybody's using it. It's very difficult to know. But there is a real, there are two arguments here, and I want to know your thoughts. Like, this is an important one. I need your help in leaving comments down below. There are two ways NVIDIA, I mean, there are many ways NVIDIA can go here, but these H100s, these GPU server chips, will either get competed away, or you'll see this one-time purchasing, right? You'll see this. Alternatively, you could see H100s via software and via just being the best chips that there are, maintain a massive moat. The total server segment could 3x with a demand to rebuild all or to build all new as GPU. That would be somewhere around 2 to 3 trillion in spend on servers. That's an insane number, by the way. Trillion on spend. That's an insane number. You know, again, Google spent like 7 on CapEx last quarter. That's like 28 bill in the year on average, annualized. You know, even if they doubled, they'd be at 50 bill. You would need 20 Googles just to get to $1 trillion. You'd need 40 Googles to get to $2 trillion. That's assuming they already double. So there are definitely some pie in the sky risk factors over, oh my gosh, let's just extrapolate everything to the moon. So there are definitely risks here, and I do not yet have all of the answers, and I'm already 22 minutes into this video. But my question for you, and which I really want you to answer down below, is why have you not joined those programs on Building Your Wealth yet where we can brainstorm together? And then the second question I have is, who's the competition? Third question, what's the growth rate, in your opinion, going to look like for the server sector, and how much needs to be GPU? Is AI a fad? If it's not a fad, then what's to stop NVIDIA from being the monopoly of this market? I'm blown away. I do not have all the answers. I was absolutely blindsided by today's report. I wholeheartedly admit that I was blindsided by today's report. I knew the chips would do well, so I was right about that, but I was not all the way right because I just didn't realize the magnitude at which this thesis would be correct. And then we do not know how much longer that will last either. So I need your help. Please leave comments down below, thorough details, especially if you have experience in this, and I will put another video. If you leave good comment, like real useful comments, I'll put another video together where we do some more conclusive research. But these are just my first impressions, and I'm blown away. Now, I want you to know this: when it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced